It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's already Wednesday evening, May the 18th, 2016. Happy hump day to you. We have another exciting newsletter for you tonight. We've got crude, S&P, gold, and of course, we can't forget about that chaotic market, the euro. We have some aggressively bearish markets this evening in tonight's video. Crude responded with strength after the inventory report sent prices lower today. The S&P, although bearish, looks a little bit punch drunk, a little bit confused on the E-mini. We're looking for some traps and then back down the E-mini, while the gold and euro had some very aggressive moves lower, testing major support. I'll tell you, never a dull moment. I talked about this last night. It's great to be a day trader right now because these moves from one day to the next have been just incredible here in the year 2016. Got a great newsletter for you guys and gals tonight. We'll check news, we'll look at the charts here in a moment, but I do want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're on our YouTube channel or anywhere else on the interwebs, there's a link in the description of the video, and that'll take you over here to our blog at Sideways Markets. That way you can watch the full-length version. While you're here watching the full-length version, don't forget, if you're not a member of schooloftrade.com and you'd like to get a free pass to attend our trade room as a guest for a few days this week or next week, grab your free pass in the upper left-hand corner. Also, don't forget, I'm going to send you an email every evening when this nightly newsletter is ready. All I need you to do is register for the mailing list in the lower left-hand corner. Give me your name and your email address, and then check your inbox. I'm going to verify your email address by sending you a test email. Below the video tonight, don't forget, you can have all the charts ready on your computer tomorrow. Follow that link right below the video tonight. And then, of course, I always get plenty of questions about what do you learn here as being a student? What's more information about our 3 levels of membership? What does it feel like to be a member here at schooloftrade.com? You know, we're one of the longest running trading education websites on the planet. Look for more information there. Join our trial on the right-hand side. And don't forget, I'm always standing by 24/7, 365 to answer all your questions. Use that live support button on the right-hand side of the blog. I hope you wore your helmet for tonight. We get some markets moving here. Before we jump into charts, though, let's take a look at the schedule for tomorrow, this Thursday, May the 19th. We do have some news out of Australia tonight. We got the Aussie Labour Force survey at 9:30 p.m. Eastern Time. If you're trading the Aussie session, the Asian session, early London, we may see some blowover from that overnight. I don't anticipate that to be too much of a market mover, even though I love you guys down. I don't expect that to be too much of a market mover. Tomorrow, though, we're going to see a lot of important news. You can see here, retail sales at 4:30, ECB minutes at 7:30. Ding, 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 ding. And that's going to be the big one right there. 7:30 a.m. tomorrow morning, we're going to see the ECB minutes. That means obviously gold and euro. Heads up, we get some big news tomorrow morning at 7:30 a.m. Eastern Time. I can't even imagine the euro being more chaotic right now. It's definitely been a chaotic market. Beautiful for day traders right now, but wouldn't want to try to stomach some of those big moves on some long-term holds on the euro. Bottom line, though, is tomorrow in the London session, heads up, 7:30 a.m. tomorrow morning, we got the ECB meeting minutes. I'm sure there's going to be something in those notes that traders will latch on to. If you're with me tomorrow morning in the U.S. session, we open up our trade room. What time? At 8 o'clock Eastern Time. We'll be looking at jobless claims and the Philly Fed survey tomorrow morning at 8:30 a.m. Eastern Time. Is that it? Yeah, that's about it. That's about all we're going to worry about tomorrow. We get some nat gas inventories at 10:30, balance sheet at 4:30, but those will be some minor market movers tomorrow. Big news tomorrow morning, 7:30 a.m. and 8:30 a.m. It's all going to be condensed in that 1 hour block, and then we'll have the rest of the day to sort it out and find those reliable trading opportunities. Don't say I didn't warn you out there tomorrow morning, 7:30 a.m. and 8:30 a.m. Eastern Time. Now, see if we can make some sense out of these crazy markets here right now. Crude oil is bearish with three legs down and trading at the low of a pending bear channel, which tells us that sellers will likely take some profit and counter trend scalpers will be looking for buying opportunities back to channel highs where we can assume there'll be swing sellers waiting to sell it right back down again. The bulls had control for most of the session today ahead of that news we talked about, 10:30 a.m. But then the inventory report, the hurricane inventory came out and quickly sent prices lower with 3 legs down to basically fill the gap from contract rollover. We are now trading on the 716 contract on crude. It's amazing how when you roll over, you pay a premium for price in the future. So the price in the future contract is usually higher than the current front month contract. And it's amazing how by the end of the day today, it quickly filled that gap. That's really all it did, right? That's really all it did. Now, of course, we're looking at a pending bear channel that's yet to be confirmed, but we know that sellers are going to start selling at all the previous swings overhead until this market returns back to its lows or can stay above the battle zone up around that $49 a barrel. Couple key components here on the chart right now. Couple key components on the chart. First of all, again, like I said earlier, we are on the 716 contract. The 18th of the month is your typical rollover. Sometimes it comes a little bit early. Sometimes it goes a little bit late. It always seems to come around a Wednesday or Thursday, though, for some crazy reason. I'm just glad they got the inventory report out of the way and rollover out of the way today. So it's smooth sailing here for the rest of the month of May until, of course, we roll over to the 816 contract, which is going to be when? Usually right around the 18th of the month, right? Next month. They call it futures for a reason. We teach you guys all about the fundamentals of the futures markets. You have to understand that contract rollover is the biggest difference among leverage and liquidity and incredible tax advantages of trading futures. Big reasons why we like trading futures. But the one big variable is rollover. We cover that in our beginner's course here at School of Trade. Get yourself some education on that before you go gambling your money away. As you can see here, get a couple technical clues here. We have a bear channel. This is pretty much a pending bear channel. We have the lows. Yeah, we have the highs. You can see it all looks nice and pretty here. No surprise they found support down at the low here. What does this bear channel tell me? The bear channel clearly illustrates the sellers have control. And ultimately right now, you'll be expecting to see sellers parking their orders above all of these prior swings. So as this price goes higher, and of course, short-term buyers, you guys can look for a new higher high, hold a pullback. You've got to get a pullback to hold before you're going to have any real reliability to be a buyer in this market right now. What we expect to see, though, is we expect to see this market, as it goes higher, get overwhelmed with sellers and eventually come right back down. Now, here's the hard part. This is a pretty extreme situation. You can see we got a pretty strong bear market. So this channel, again, is a pending channel. We have not seen it, we haven't seen it respond to the high yet. So for all we know, this is nothing more than just a little tiny spike in channel here, and we may get nothing more than a trap high and right back down. So we have to be aware of that. There's no guarantee that we're going to get this market all the way back up to the high. Remember, there's no guarantee in anything. This market will do exactly what it wants to do. But here's what we know. We know that there is resistance here overhead. Prior swing at 48.60. The battle zone at 48.94 to 48.79. The high of the channel, right? And of course, a prior swing up here at 49.12. As that price goes higher, sellers will be trying to get in to sell it short, to sell it short, to sell it short. In my opinion, we really can't call this a safe bullish market until we get and stay above that battle zone area, which I have labeled from 48.94 to 48.79, right? About halfway back off of that move lower. Okay, so you've got to be aware of that. Sellers are going to be coming in at all of these areas of resistance. We call them swing sellers, right? So sellers will have their orders parked as this price goes higher. They'll be waiting here with limit orders, just waiting to get short. What a scalp seller, right, a swing seller, is prepared to sell more if price goes higher, right? So the definition of a swing seller is somebody who says, I'm going to put my stop loss all the way up here. I'm going to sell a couple here. I'm going to sell a couple here. I'm going to sell a couple here. I'm going to sell some more here. I'm going to sell some more here because I know that eventually the odds are very much stacked in my favor. This market comes right back down. Now, what if you can't afford a big loss like that? What if you can't build a 25 contract position? Well, we call you a scalp seller. So scalp sellers are going to wait for the turn. Once you see the turn, hold the pullback and go. Again, once you see the turn, hold the pullback and go. Once you see the turn, hold the pullback and go. Scalpers have to be a whole lot more disciplined. Well, we can't use a 100 tick stop if you're a scalper. We're going to use a 10 to a 15 tick stop. So as this price goes higher, let's take for example this battle zone up here, just below that $49 a barrel. As the price goes higher, here's what scalpers are looking for. First of all, this first step is going to be the buyers fail on a pullback. That failure will lead to stop outs, right? Buyers get stopped out. When stops get run, it leads to strength. Failures lead to strength. Once that strength confirms that lower low, the next opportunity is the pullback, and that's going to be the safest bet if you're going to be a seller, right? Is that pullback. As I always say, failure leads to strength. Strength lead to pullbacks or continuations, and continuations will lead to a new lower low. That cycle continues, back down we go. So if you're going to be a buyer right now, wear a helmet. Wear a helmet. The most important thing I can tell you right now if you're going to be a buyer is, unless we get a double overshoot of this low, we're going to see one of those on gold in a moment. Unless we get a double overshoot is a 50-50, it's the most reliable reversal. A double overshoot here will give you a 50-50 shot at buying off that low. Just make sure you use a 1 to 2 risk to reward ratio if you're going to use a double overshoot at that low, because it's 50-50. Remember, this is a bearish market, for crying out loud. If you're trying to buy in a bear market, you're not going to have a high reliability. Yeah, there's a lot of profit potential, but the reliability is going to be very low. So you got to take every single one of them, and you got to make sure your stop is much smaller than your target. So keep that in mind. So buyers, one option is, if we go lower, look for that double overshoot. Right? If we go higher here, you've got to see price make a new higher high, hold the pullback, and then you've got at least some confidence that sellers are not aggressively selling into that, and you can buy coming off that low. But be careful, because like I said before, all of these prior areas of resistance, my eye will be on the battle zone overhead. Even if we get above the battle zone, it doesn't mean the buyers can hold that pullback now and we go right back down again. We saw a great example of that in the S&P, right, from last night's newsletter into today's session. So buyers, keep it close to the vest tomorrow. Sellers, be patient for price to get up off this low, because that's where you'll be rewarded with the best opportunity here to sell off that low. I won't be surprised at all if we see this thing overshoot one more time and then start to gain some ground going higher. It's very difficult for me right now to say to sell this market right here. It's very difficult to want to sell this market right now. I want to see a trap high. I want to see this market get up off these lows, get to an area of resistance where at least I know I'm selling at least a little bit off the lows, and that's what you can bet a lot of those sellers are going to be looking for tomorrow. How about the S&P? The S&P is bearish as the sellers try to finish a retest back to today's lows, but a triangle on the chart tells us they might be waiting for a trap above the recent highs before they can get the job done tomorrow. The buyers had control for most of the session today before price collapsed all the way back down to complete a rotation to the megaphone pattern low from earlier this week. The bears have control of this market. Let's not confuse that with a bear channel that tells us that swing sellers will be looking to retest the 20, 30, and 3/4 low tomorrow. We just talked about this on crude oil. You can see that big move down, and you can see that there are going to be sellers waiting above the battle zone there, 47.5 to 44.25. More specifically, though, here's a really big clue. Look at that swing right there. Remember what I said on crude oil, how when we see a move going lower like this, there are going to be sellers who have their orders parked right above those swings, right? That's where your swing sellers are going to be scaling into it on the way back down. Yeah, that hasn't been hit yet, which definitely explains why we didn't get the follow through here, right? There may not have been anybody interested in that market yet. So this triangle, combined with the fact that that 2046 and a quarter area is still just hanging out there right now, it definitely tells me to expect an attempt to go higher. So looking closely at the chart, we see that prior swing at 46 and a quarter was never broken. This means there are likely some quote-unquote swing sellers